Hey guys, welcome to Trade in the Charts. My name is Rex and this is Tesla Weekly Analysis number 52 for week ending October 2, 2021. On Monday, Tesla was up 2.2%, closing at $791.36. Tesla bulls won the day as it pushed to higher highs. We had a nice break above 780 and into the orange uptrend channel. As I mentioned in last week's video, after breaking into this channel, it is highly likely that Tesla will make a run towards key resistance of the bottom of the green channel, which currently lies at around 825. It will need to hold within this orange channel though. Also, remember, the bottom of the green channel is a key level to break above because it would mean Tesla has recaptured this long-term uptrend channel that dates back to August of last year. By re-establishing itself back within this channel, it means the bull case is strong and likely that Tesla will work its way towards the top of the channel eventually, which would make for a new all-time highs. But we will need to wait and see if the bottom of the orange channel at 780 can now act as a support level going forward. On Tuesday, Tesla was down 1.7%, closing at $777.56. Markets sold off, but Tesla held up relatively okay. It had a breakdown below the orange channel at its intraday lows, hitting 766, and bounced back a bit before closing just below the orange channel at 780. It's a bit discouraging to see it was unable to hold within the orange channel, but we will let itself play out the rest of the week to see if it can recapture this level. The likelihood of this happening is more so than not, with the upcoming delivery numbers for the third quarter serving as a near-term catalyst. The quicker it can reestablish itself within this channel and hold within it, the more likely it will make an attempt to run up and retest key resistance of the bottom of the green channel, which currently lies at around 830. Things are still looking rosy for the bulls because if we look at the weekly chart, Tesla is in a strong uptrend with well-defined support at the bottom of the uptrend channel. We have the same picture on the monthly chart with the well-defined support of the bottom of the uptrend channel. On Wednesday, Tesla was up 0.5%, closing at $781.31. Tesla traded in a 20-point range as it swung from its highs in the green at 793 in the AM to red at the lows at 770 in the afternoon, only to close slightly in the green. It closed right around the bottom of the orange channel as it indecisively trades back and forth over this trend line. With the upcoming catalyst of another anticipated blowout quarterly delivery number, it could push Tesla easily into the orange channel, but we will have to wait and see. The overall picture favors the bulls as Tesla is trading in a steady uptrend as shown by the yellow trend line, which goes back to May 19. Also, Tesla is trading well above both the 50 and 200-day moving average, which currently lie at 716 and 699 respectively. These moving averages are also in a steady upward slope with the 50-day moving average above the 200-day moving average, which are bullish indicators as well. On Thursday, Tesla was down 0.8%, closing at $775.48. It continues to battle resistance with the bottom of the orange channel and has closed below it once again. I presume it has not traded decisively above or below this trend line because of the upcoming quarterly delivery numbers slated to be announced either tomorrow or by early next week. If we finally get a bullish reaction to these numbers, it could take Tesla stock up towards the bottom of the green channel or even higher at 830 and above. To the downside, if we get a negative reaction, we could see it dip back within the consolidation zone between 730 and 765. On Friday, Tesla was down 0.1%, closing at 774.74. As anticipated, Tesla is trading flat leading up to the announcement of third quarter deliveries, which will likely be announced over the weekend. It appears bulls and bears will wait till numbers are released as there could be a lot of volatility. The street is expecting record numbers again, so Tesla will have to post a considerable beat to already lofty estimates in order to impress them. It is bittersweet as Tesla is posting record deliveries quarter after quarter, but the stock is not being rewarded due to the already high expectations set by the street. Kind of like analysts know if they post high enough estimates that Tesla's actual numbers won't seem as outstanding, although they are record-breaking numbers. Sounds like bearish analysts are playing dirty tricks, to be honest. Now, let's look at the technical analysis. As I've been saying, Tesla has been finding resistance of the bottom of the orange channel, which currently lies at 785, and has yet to break back above it after its false breakout on Monday. With the deliveries announcement, I expect there to be a decisive break to the upside and back into the orange channel. We could potentially see buyers push Tesla stock to the next major resistance of the bottom of the green channel, which currently lies at around 835. If Tesla manages to break out above 835, we will likely see it run up to the top of the orange channel, which currently lies at around 875. In the most absolute bull case, if it breaks above 875, we could see a run to new all-time highs at the top of the green channel, which currently lies at $1,050. To the downside, we have support of the top of the consolidation zone at 765, which Tesla retested today at its lows, hitting 763. The next support below that would come in at the bottom of the consolidation zone at 730. If it breaks below further, we could see a drop to support of the 50-day moving average, which currently lies at 721. Then support of the 200-day moving average, which currently lies at 701. So those are my price predictions for next week. Bull case, we have resistance at 785. A break above that, and we will see a run to major resistance at 835. If it can break above that level, we will likely see a push to 875. Finally, a break above 875 would set up Tesla for a bull run to all-time highs at 1,050. Bear case, we have support at 765. A break below that, and we could see a drop to 730. If it continues to fall lower, we will find support of the 50 and 200-day moving average, which currently lie at 721 and 701 respectively. Now, on to Tesla news. Tesla Shanghai to make 300,000 cars January through September despite chip shortage. Tesla's Shanghai factory is expected to produce 300,000 cars in the first 9 months of the year, capped by a delivery rush in the end of the July to September quarter, despite a global semiconductor shortage, two sources said. The factory makes the electric Model 3 sedans and Model Y sport utility vehicles for domestic and international markets, including Germany and Japan. Around 240,000 vehicles were shipped from the factory in the first 8 months, including many for export, according to data from the China Passenger Car Association. Tesla has not announced details on the factory's production. In August, an official in the area where Tesla's factory is located said it is expected to produce 450,000 vehicles this year, including 66,100 for export. Jason DeBolt tweets an interesting chart of where we are on the S-curve for Tesla vehicle sales as EV adoption grows over the next 2 decades. He tweets, "This is just the beginning. We are 10 years away from the S-curve inflection point for Tesla vehicle sales. Massive decade of accelerating growth ahead." Piper Sandler analyst Alexander Potter raised estimates on Tesla and reiterated an overweight rating and a $1,200 price target. Potter said Tesla is poised to report the best ever quarter in quarter 3. He raised his 2021 delivery estimates to 894,000 from 846,000. For third quarter, Potter estimates 233,000 deliveries amid reports of strong production. People often focus on deliveries, but this metric probably gets too much airtime. We are more interested in margins, which we think could be particularly strong in Q3, Potter said in a client note. On wider EV trends, the analyst commented, China's world-leading EV penetration is still driven by Tesla and by local brands. Top-selling EV brands in China include Wuling, Tesla, BYD, Aura, Trumpchi, NIO, and XPeng. But in Europe, several mainstream brands are contributing, especially Volkswagen. In China and the US, some high-profile EV launches have underwhelmed, but the frequency of serious EV launches will increase in 2022 to 2024, Potter added. One-time big Tesla bull Chamath Palihapitiya says he sold his position. Social Capital founder and CEO Chamath Palihapitiya revealed that he sold his Tesla position for capital to invest in other investment ideas. He said he exited his bet on the Elon Musk-led electric vehicle company in the last year or so, as the high prices allowed him to generate cash to fund his other ideas. And by the way, if you guys want to support the channel and get a free stock worth up to $221.50, be sure to use my referral link in the description below to sign up for Robinhood. Thanks for watching, guys. Please hit that thumbs up if you enjoyed the video and subscribe for more content.